You buy a new construction home, budget it carefully, and settle into your mortgage payments. Then year 2 hits, and your mortgage payment jumps by hundreds of dollars. You weren't expecting it, and now you're scrambling. So what happened? This isn't a lender mistake or an interest rate change. It's a tax reassessment trap that catches thousands of buyers off guard. Today, I'll break down why this happens, how much it could cost you, and how to avoid it before it's too late. When you buy your home, your mortgage payment isn't just principal and interest. It includes something called the escrow, which covers the property taxes and insurance in a new construction home. Your initial tax bill is based on the land value only because the county hasn't assessed the completed home yet. Year 1, your tax bill is low because the county record only showed the land value. Year 2, the county reassesses the full value of your home and the land, and the taxes jump significantly. Your escrow account is short, so the lender raises your payments to cover the shortage. This happens often, especially in places like Texas, Florida, and Arizona, where new builds are everywhere and property values are rising quickly. Let's take a real world example. You buy a $400,000 home in Texas with a tax rate of 2.5%. Year 1, taxes are based on the land value only, $50,000. That's about $1,250 a year, or $104 a month. Year 2, taxes are reassessed at the full value, $400,000. That is $10,000 a year, $833 a month. Your escrow is short, $8,750. The lender solution: raise your mortgage payments by $729 a month or demand a lump sum to cover the gap. This is a major financial shock if you haven't planned for it. Some buyers are forced to cut back on essentials, take on debt, or even fall back on their mortgage payments. So who's most at risk? Number 1 on that list: first-time home buyers. Many buyers assume that the mortgage payments are locked in, which they are, but the escrow can change. Number 2, VA loan users. Since the VA loan has no required PMI, that's private mortgage insurance, many veterans are focused on the principal and interest, overlooking the tax adjustments. Number 3, buyers in fast-growing areas. The more the home value rises, the more property taxes are reassessed and increase. And we have seen that here in Austin, Texas quite recently. Number 4, which is the main people that I'm speaking to on this video, because these are the ones that's going to see the biggest jump in their monthly payments from the escrow standpoint when the tax increase, is anybody buying a new construction. Even experienced home buyers can get caught off guard if they never dealt with a reassessment before. If you don't prepare for this in advance, it can create a major financial strain. One of the first things you want to do to avoid this situation is ask your lender for the escrow amount that's based on the full home value. Meaning will show just the land only estimate at closing to make you feel good about the monthly payments, but you want to push them for the realistic tax projection. Number 2, call the county tax assessor and ask for the estimate amount on the post-construction rate. Compare it with the nearby homes to get a better idea of what to expect and what you will actually pay in year 2. Number 3, save the difference up front. If your year 1 tax is only $1,250, but year 2 jumps to $10,000, set aside at least $700 a month so you'll be ready. Number 4, look into exemptions. Texas offers full tax waivers for 100% disabled veterans. Homestead exemptions in many states can lower your bill when you apply early. And lastly, one of the things you want to do is monitor your monthly mortgage statements. If your escrow balance is looking low, take action before the lender adjusts your payments. Typically, they'll give you some time to give you that lump sum of the difference before they make the adjustments for you. Usually that grace period is between January and the month of March. So, in closing, buying a new construction home comes with unexpected costs, but now you know how to prepare. Your first tax bill is not accurate. Plan for the full assessment. Escrow is not fixed. Stay ahead of the changes before it affects your mortgage. A little planning now can save you thousands in financial stress later. If you're buying a home soon, make sure you ask these questions. Plan ahead and don't get caught off guard. My name is Raoul, broker and owner of Ready for Real Estate here in Austin, Texas. Thanks for watching, and I'll see you next video.